Welcome back to We Are Cosmic, where we cut through the noise, ignore the hype, and focus on what actually matters in crypto and finance. If you're here because you want real insight, not clickbait fear or blind optimism, then you're exactly in the right place. Today's update is important, not because of one single headline, but because of what the market is quietly telling us beneath the surface. While most people are still trying to process yesterday's chaos, something big already happened. Over $340 billion flowed back into the crypto market. Let that sink in for a moment. This is not random money. This is not emotional retail chasing green candles. This is capital repositioning. And when capital moves like this, it always leaves clues behind. At the same time, XRP briefly dropped all the way down to around $1.10. That level scared a lot of people. Some panic sold, some froze, and some quietly bought without telling anyone. So let me ask you directly. Did you buy XRP near $1.10, or did fear win yesterday? Are you holding, dollar cost averaging, or waiting on the sidelines? Drop it in the comments, because understanding crowd psychology is just as important as reading charts. Here's where things start getting interesting. While social media was full of panic, XRP trading volume exploded, especially in South Korea. In the last 24 hours alone, XRP recorded $1.7 billion in volume, making up nearly 35% of total exchange volume on Korea's largest exchange. Number one, above Bitcoin, above Ethereum, above Solana. That is not normal behavior during a dead market. When XRP starts outperforming majors like Bitcoin and Ethereum in real trading volume, not narratives, that's a signal. And I love seeing it. Because while institutions elsewhere are quietly filling ETF bags, Korean retail is making their choice very clearly. This is not rotation out of XRP. This is rotation into conviction. The rotation game that most altcoins play, XRP isn't playing it. XRP is winning it. And that's not my opinion, that's what the data shows. While retail traders panic sell during dips, institutions step in with discipline. XRP spot ETFs currently sit around $55 million, and just yesterday alone, we saw over $80 million flow into XRP ETFs in a single day. One day. Think about that. Ask yourself this. Institutions don't chase pumps. They buy fear. And right now, XRP is trading at levels institutions have not seen in years. Prices that were once $3.50, $3, even $2.50 are now significantly lower. To retail, it feels like a landslide. To institutions, it looks like opportunity. And here's the key point most people miss. Nothing fundamental has broken. Ripple hasn't shut down. The XRP ledger hasn't failed. The use cases haven't disappeared. In fact, Ripple just secured EMI licensing across the entire European Union. Expansion is continuing. Partnerships are growing. Infrastructure is being built quietly while price distracts you loudly. This is why price alone is a terrible teacher. Price reacts last. Fundamentals move first. So before we go deeper into ETF flows, institutional DeFi, real-world asset tokenization, and why this next phase may shock a lot of people, do me one quick favor. If this kind of clear, grounded analysis helps you think better, hit the like button. It genuinely helps this channel reach people who need clarity, not chaos. Yesterday was a perfect example of this divide. While retail traders were panic selling XRP around the 1.10 to 150 range, institutions were buying aggressively through spot XRP ETFs. This is not speculation. The data is public. Over $80 million flowed into XRP ETFs in a single day, and that followed another strong day of inflows before it. These are not day traders. These are funds, asset managers, and long-term capital allocators positioning early. Here's the uncomfortable truth most people don't like to hear. By the time price feels safe, institutions are already done buying. They buy when sentiment is broken, not when Twitter is bullish. That's why you often see ETFs and large players accumulating while YouTube headlines scream fear. They understand cycles. Retail reacts to candles. Institutions react to structure. Now ask yourself this question honestly. If XRP was trading at $3 just weeks ago, what changed fundamentally to justify panic at 110? Did Ripple lose its licenses? No. Did the XRP ledger stop processing transactions? No. Did global banks suddenly abandon blockchain payments? No. The only thing that changed was price, and price alone does not equal value. In fact, fundamentals have actually improved. Ripple recently secured EMI licensing across the European Union, which allows it to operate more deeply within regulated financial systems. That is not a small achievement. That's years of compliance work paying off. At the same time, the European Central Bank is opening the door to tokenized settlement, and institutions are actively preparing infrastructure for real-world asset tokenization. XRP Ledger is positioned directly in the middle of this shift. This is why institutions are comfortable buying here. They're not guessing where price goes tomorrow. They're betting on where infrastructure will be needed tomorrow. Another important signal came from centralized exchange data. One of the big fears many people had was that only ETFs were buying XRP, while retail stayed away. But that fear didn't play out. We saw positive inflows of around 16 million XRP into centralized exchanges in a single day. That tells us something very important. Retail didn't disappear. Retail bought the dip. This matters because healthy markets need both sides. Institutions bring scale. Retail brings momentum. When both start buying during fear, it usually marks the later stages of a correction, not the beginning of collapse. Now let's talk about the idea that we've been in a bear market for 13 months. This is a dangerous oversimplification. Markets don't move in straight lines. Bitcoin, for example, is still up massively over the last 2 years, even after this pullback. Sometimes assets go up too fast and need time to cool down. That doesn't mean the cycle is broken, it means it's resetting. Think about it this way. If something goes up 400 to 500% in a short period, it doesn't stay there forever without pauses. Pullbacks are not punishment. They are redistribution phases where weak hands exit and strong hands enter. XRP fits perfectly into this pattern. It didn't just randomly drop. It pulled back into a zone where long-term buyers are comfortable stepping in. And the fact that we're already seeing rebound strength, especially across ISO-related tokens, tells us that capital is rotating intelligently, not fleeing the market entirely. The real question now isn't, will XRP survive? That question is already answered. The real question is, how prepared are you mentally for volatility before the next expansion phase begins? Because history shows us this clearly. The most painful periods emotionally are often the most profitable periods financially, but only for those who stay rational. Recently, the XRP Ledger Q4 report was released, and while most people skimmed past it, the numbers inside are powerful. XRP ETFs launched in November 2024 and reached $1 billion in assets under management in less than 4 weeks. That is not normal. That makes XRP one of the fastest growing ETF products since Ethereum. Products don't grow like that unless there is real demand underneath the surface. At the same time, RLUSD, Ripple's stablecoin on the XRP ledger, saw its market cap grow 164% quarter over quarter, reaching around $235 million. That kind of growth doesn't happen in a dying ecosystem. Stablecoins are the backbone of real-world blockchain usage. They are used for payments, settlements, treasury management, and cross-border transfers. When stablecoin activity grows, it means real economic activity is happening. Now look at real-world assets, one of the most important trends in crypto today. The market cap of tokenized real-world assets on the XRP ledger grew 37% quarter over quarter, reaching over $280 million. And what's even more interesting is that in the last 30 days alone, real-world asset tokenization on the XRP ledger reportedly surged by over 200%. That's not hype. That's institutions experimenting, testing, and building. This is exactly what adoption looks like in its early stages. It's quiet. It doesn't trend on Twitter every day, but it compounds. We also saw average daily transactions increase on the XRP ledger, showing that network usage continues to grow even during price corrections. That's a critical point. In weak projects, activity drops when price drops. In strong networks, usage keeps growing regardless of price. XRP is behaving like the second category. Now, let's connect this to institutions. Ripple recently outlined an institutional DeFi blueprint for the XRP ledger, and this is a game changer. For years, institutions avoided DeFi because of compliance risks, unclear custody, and lack of control. Those barriers are now being removed at the base layer of the XRP ledger. Features like permissioned domains, compliance tools, institutional-grade custody, and regulated access are being built directly into the infrastructure. Without these features, banks would never touch DeFi. With them, DeFi becomes usable, scalable, and compliant. This is why institutional interest is rising now, not later. This also explains why major banks are either already partnered with Ripple or actively becoming partners. Digital asset infrastructure is not optional anymore. Traditional finance is being rewired, and Ripple is positioning XRP Ledger as a settlement layer that banks can actually use without breaking regulations. Another major development is yield generation for institutions. Through platforms like HexTrust, institutions can now access FXRP, stake on Flare, and generate yield on XRP through compliant custodial infrastructure. This is massive. It means XRP is no longer just a bridge asset sitting idle. It can now be productive capital for institutions. When assets start generating yield in regulated environments, demand changes completely. Pension funds, asset managers, and treasury desks care about yield, not memes. The more use cases stack on top of XRP, the harder it becomes to ignore. And here's the key insight most people miss. Adoption doesn't explode overnight. It grows in layers. First infrastructure, then experimentation, then integration, then scale. XRP is clearly moving from experimentation into integration. So when price lags while fundamentals grow, that's not a contradiction. That's an opportunity window. One of the strongest examples right now is Bitso, one of the largest crypto platforms in Latin America. Bitso has been actively accelerating cross-border payments using Ripple payments and RLUSD, and their message is very clear. The old system is broken. Moving money across borders through traditional rails can take days, sometimes even weeks, and involves multiple intermediaries taking fees at every step. That system is outdated. With blockchain-based settlement and stablecoins like RLUSD, Bitso can move money instantly at near zero cost with full transparency. No waiting, no hidden fees, no unnecessary hops. This isn't a future promise. This is already happening today. Bitso's leadership explains something very important. The two biggest problems in regions like Latin America have always been remittances and local currency volatility. Blockchain and stablecoins solve both. People can send value quickly, and businesses can protect themselves from unstable local currencies. That's why adoption starts in regions where the pain is real, not where the headlines are loud. This is also why RLUSD matters so much. Stablecoins are the bridge between traditional finance and blockchain. They allow corporations to move money without exposure to price volatility, and as regulation improves, trust increases. When companies understand how reserves are managed, how audits work, and how compliance is enforced, they are far more willing to adopt. That's exactly what we're seeing now. Regulation is no longer the enemy of crypto adoption. In many cases, it's the catalyst. As rules become clearer, institutions feel safer entering the space. This is why Ripple focused so heavily on compliance while others chased hype. And here's a key point you need to understand. Innovation doesn't belong to one country or one company. If you stop innovating, you become obsolete. Traditional payment systems didn't fail overnight, but they stopped evolving. Blockchain-based systems didn't replace them suddenly, but they kept improving quietly. That's how disruption really happens. Ripple's strategy has always been long-term. Build the rails first. Work with regulators, partner with banks, then scale. And now, we're entering the phase where scaling starts to become visible. This also explains why we're seeing renewed strength across ISO-related tokens like XRP, XLM, HBR, Algo, and others. These assets are tied to compliance, interoperability, and institutional frameworks. When markets get volatile, capital doesn't disappear. It rotates. And right now, it's rotating toward assets with clear, real-world use cases. After sharp drops of 30 or even 40%, markets often see strong rebounds. That doesn't mean volatility is gone. It means buyers are stepping in strategically. The question isn't whether volatility will continue. It's whether you understand what volatility is doing. Volatility is the market transferring assets from impatient hands to patient hands. This is why short-term fear often sits right next to long-term opportunity. Now, let's connect this back to XRP ETFs. According to recent data, XRP and Solana ETFs were among the top-performing crypto ETFs last year. Even during broader market pullbacks, XRP ETFs continue to attract inflows. That tells us something critical. The majority of ETF capital is not short-term money. It doesn't panic sell easily. It's positioned for multi-year trends. People often forget that Bitcoin itself went through long periods of consolidation after massive runs. A pullback does not erase years of growth. It resets expectations. And XRP, like many other assets, is going through that reset now. So if you're feeling uncertain, that's normal. But uncertainty is not the same as weakness. One of the most overlooked but important developments recently is institutional custody and yield access for XRP. Through platforms like HexTrust, institutional clients can now mint and redeem FXRP and participate in staking through compliant infrastructure on networks like Flare. This may sound technical, but the implication is massive. It means institutions can now put XRP to work instead of just holding it passively. In traditional finance, idle capital is inefficient capital. Large funds are always looking for ways to generate yield without taking unnecessary risk or violating regulations. Until recently, XRP didn't fit neatly into that framework. Now it does. Custodial access, regulated staking, and compliant DeFi bridges change the conversation entirely. This is how adoption really accelerates. First, you create access, then you create incentives, then capital flows. At the same time, more DeFi primitives are going live across the XRP ecosystem. New protocols, liquidity tools, and financial products are being built quietly. Most people won't notice until usage explodes, but by the time it becomes obvious, early positioning is already done. What's important here is the pattern. Every major financial asset that became institutional grade followed the same path. Regulation first, infrastructure second, yield and utility third, scale last. XRP is now clearly moving through stages 2 and 3 at the same time. This also explains why large players are comfortable accumulating during fear. They're not trading the next candle. They're positioning around infrastructure maturity. Another key point is institutional confidence. Major banks and financial institutions don't experiment lightly. The fact that so many are either partnered with Ripple or actively exploring XRP ledger-based solutions tells us that this technology passed internal risk assessments. That alone filters out 99% of crypto projects. Now let's address the emotional side of the market. Not everyone will hold through this phase. Some will sell because they're tired. Some will sell because they expected instant gains. That's normal. Markets reward patience, not urgency. History shows this again and again. The biggest gains often come after long periods of frustration, not excitement. And XRP has been one of the most frustrating assets emotionally for many investors. Ironically, that's often a sign that the market is doing exactly what it's designed to do, shake out weak conviction. What makes this moment different is that fundamentals are finally catching up with long-term expectations. For years, XRP's narrative was ahead of its infrastructure. Now the infrastructure is here and the narrative is lagging behind. That's a rare alignment opportunity. We're also seeing clear signs that XRP is no longer isolated. It's part of a broader institutional crypto framework that includes tokenized assets, compliant DeFi, regulated stablecoins, and cross-border settlement. These pieces don't work in isolation. They reinforce each other. So when you zoom out, the recent price drop looks less like a failure and more like a reset before expansion. That doesn't mean price goes straight up from here. Volatility will remain, but the direction of development is clear. Welcome to the final piece of today's XRP breakdown. By now, you should see the bigger picture forming. XRP is not just trading on charts or hype. It is quietly building real-world utility and institutional adoption. And understanding this is critical if you want to approach crypto like a professional, not just a speculator. First, let's summarize the core points. Over the last few months, we've seen record ETF inflows, centralized exchange inflows, and growing retail participation. Institutions are stepping in through regulated channels like HexTrust, creating yield and staking options. At the same time, Ripple has expanded its regulatory compliance, secured EMI licensing in the EU, and continues to partner with banks for real-world asset tokenization and DeFi solutions. These are not small achievements. These are the foundations of long-term growth. Now here's the mindset you need. Crypto, especially XRP, is volatile. Price swings of 20-40% in a single day are normal. But volatility is not your enemy. Ignorance is. Most retail traders panic because they don't understand the drivers behind the moves. The smart money doesn't panic. They see opportunity in chaos. That's why yesterday's 110 dip wasn't just another low. It was a buying window for those who understand the fundamentals. Another critical factor is adoption in real-world payments. Platforms like Bitso and RLUSD are proving that XRP can move money across borders faster, cheaper, and more transparently than traditional rails. This isn't theory. This is happening now in real economies, solving real problems. And as adoption grows, demand for XRP naturally grows too. The more XRP is used in regulated, productive financial systems, the harder it is to ignore. Let's talk numbers briefly. XRP ETFs have now reached over $1 billion in assets under management, making them one of the fastest growing ETFs in crypto history. RLUSD stablecoin activity is up over 160% quarter over quarter, and tokenized real-world assets are growing at over 200% in just 30 days. That kind of sustained growth shows organic adoption, not speculation-driven hype. Now, here's the reality check. Not everyone will stay. Some retail traders will sell out of fear. Some will chase other opportunities. That's okay. Markets are designed this way, to shake out weak hands. But the strong hands, the ones who understand institutional flows, compliance adoption, and infrastructure growth, will be positioned to benefit when XRP moves to its next phase. Looking ahead, the key drivers will be institutional onboarding, DeFi integration, cross-border adoption, and stablecoin usage growth. If you pay attention to these factors, price is just a lagging indicator. It will eventually catch up to fundamentals. Historically, the largest gains come not during hype cycles, but when fundamentals quietly align with infrastructure and adoption. So, the takeaway is simple but powerful. Don't chase charts, don't panic sell, watch the real adoption, follow the institutional flows, understand the fundamentals. Those who do will find themselves in a very strong position when XRP heads toward its next all-time highs. Finally, a quick word from me personally. Thank you for trusting We Are Cosmic as your guide in this complex space. Crypto can feel overwhelming, but it doesn't have to be. With clarity, patience, and an understanding of real-world trends, you can make intelligent decisions that matter, not just emotionally, but strategically. This is the year to think like an institution, act like a professional, and stay curious. XRP's story isn't over. In fact, it's entering one of its most important chapters yet. Stay alert, stay informed, and remember, volatility is temporary. Fundamentals last.